Hello, I'm Sophia Hangyu, Product Specialist at Mirae Asset, and joining me today is Zhou, Portfolio Manager and Senior Investment Analyst, to talk about the likely defaults of Chinese property developers and their broader implications. Welcome, Daniel. It's great to chat with you today.
Thank you, Sophia.
So Daniel, we've been seeing a lot of headlines of Chinese property developers, in particular Evergrande, that are heading down the path of default. Do you think Evergrande's situation could cause a Lehman moment in China?
We don't think this will be a Lehman moment. Based on our own calculation, total liability of Evergrande is less than 2 trillion RMB, which can translate to approximately 0.7% total China credit. So therefore, for China financial system, the systematic risk is manageable.
Right. And how do you think the government plans to potentially resolve this?
Our base case scenario is that a restructuring of Everground is the likely outcome. The government has previously warned major lenders that Everground might not be able to meet some of the interest payment, which suggests to us that the government is laying the groundwork for a debt restructuring and stepping to facilitate an orderly wind down process. Having said that, given Evergrande's size, setup, obligation to the banks, home buyers, suppliers, investors, the restructuring process could be carried out over a prolonged period.
Right, I guess we'll have to see how that plays out over the coming months then. Let's have a look at the broader macro view. The Chinese property sector contributes around 20% to the country's GDP, which is quite a sizable figure. What's your outlook on the property market, and how might tightening in this sector affect the overall economy?
In near term, we do expect a continued slowdown for the market, likely weak property sales and housing starts. As you point out, the sector have an impact on other parts of the economy as well. For example, slowing property investment could have weighed on other upstream sectors. Negative wealth effect could dampen private consumption, and weak labor market within the property sector could negatively feed back into the consumption as well.
I guess the risk here is that the housing slowdown could drag fourth quarter growth below the government's annual target growth rate. And we've already seen the economy slow down in the third quarter due to the housing slowdown as well as power shortages across China. When do you think we can expect to see some policy easing? And what are some ways in which the government could stimulate the economy?
We think we are approaching an inflection point in terms of policy. From recent PBOC and policymaker statements, we noticed a softer tone towards the property sector and a more dovish monetary policy standpoint. Therefore, we expecting marginal relaxation on mortgage loans and maybe developers' loans, faster local government special bond issuance, and faster fiscal spending to support infrastructure projects, and more credit support to green economy and carbon emission reduction related sectors. And by start of next calendar year, we could also expect more front loading of more new quotas.
So to summarise, it sounds like policymakers do have a number of tools up their sleeves, and we may very well see some of this come into play over the coming months. Well, I want to turn now to the other side of the property story and consider how the property boom has affected Chinese households. Over the past decade, we've seen investable assets of Chinese households rise by about 14% per annum. And we're seeing most of this asset being held in the form of savings as well as property ownership. This is quite different when we compare it to other major economies. What do you think has driven this phenomenon in China?
This phenomenon is largely due to the rapid urbanization and excessive liquidity, which has pushed up the house prices in the past years. And this partly caused the disproportionately high Chinese household property value and allocation. However, the Chinese government is promoting more direct finance driven growth model and less reliant on property investment. From the recent Evergrande saga, we can see the determination of the Chinese government to promote housing for living, not for speculation policy.
So do you think we might expect to see household asset allocations to actually shift over time?
Absolutely. As government continue to discourage property speculation, and as the Chinese households start to search for higher yield, we should expect a gradual shift from property and deposit heavy asset allocation to more allocation, for example, mutual funds, public funds, and other wealth management products.
And what are some ways do you think that the industry could capitalize on this shift?
We do see some trends here. For example, wealth managers such as banks start to transform from a product distribution focused model to more asset allocation driven model. And in high net worth market, leading players start to leverage their deep product offerings in all channels to strengthen their value-added asset allocation services.
I guess digitalization is also a key trend here, as we're really seeing younger investors that are more attracted to innovative tools and features and functions. How do you think traditional financial institutions can compete in this space?
Very good point here, Sophia. Online platforms and fintechs certainly lead the charge. However, we see leading financial institutions start to catch up and invest heavily in technology solutions, for example, to optimize the mobile app experience and to pilot AI-powered investment advisory services.
It sounds like we can expect some innovation in this space. Well, thank you very much for your time, Daniel. It's been very interesting to hear your views.
Thank you, Sophia.
Thank you for joining us. We look forward to sharing more of our insights with you soon.